Kazakhstan, the world's 9th largest country by land area, is rich in mineral resources that have long supported its economy. However, resource depletion and the need for new investments challenge the sustainability of its mining sector. With over 30 years of limited greenfield exploration, Kazakhstan is revitalizing its mining approach through policy reforms, technological advancements, and strategic investments. Recent government initiatives focus on updating subsurface regulations, offering tax incentives, and encouraging private sector participation, leading to increased private investment in exploration. The country aims to attract both domestic and international capital by tapping into its underdeveloped mineral wealth, including rare earth metals. Artificial intelligence is enhancing data processing, while remote sensing technologies like hyperspectral imaging and LiDAR improve geological mapping. The government and companies are also employing advanced exploration techniques to access previously unreachable geological formations. Despite progress, challenges remain, such as the need for sustainable resource management. Kazakhstan's strategy integrates environmental considerations with economic growth, exemplified by projects like the Aras Minerals, Saritogan Graphite Mine, and First Quantum Minerals sediment-hosted copper exploration. Meanwhile, companies such as Scythian Mining Group and East Star Resources highlight the role of IPOs and international partnerships in scaling exploration efforts. This session with the keynote from S&P Global will explore current trends in mineral exploration, costs and emissions, offering perspectives from industry leaders on navigating technology, policy and investment in Kazakhstan's mining future.
So please feel free and come and make use of the chairs on both sides of the table here. So hopefully you're all here for the present and the future of geological exploration in Kazakhstan. The first of our speakers is going to talk about global mining trends, exploration costs and emissions, and it's Xinyu Yao from S&P Global. Xinyu, the floor is yours.
Okay, good afternoon, everyone. It's time to kick off this session. I'm Yao from S&P Global Metals Mining team. Our team has over 60 analysts based in almost everywhere. I'm based in Beijing, and this is my first time being here. So first, I want to thank the organizers and all of you for taking your time to join us. Today, I will be discussing some mining trends in our industry. So as you can see, the structure of my talk is quite simple. We will start by looking into trends based on our exploration studies, and then we will draw insights from production cost curves, and finally we will look into emissions for gold and copper. It's worth noting that almost all the data I will present today is supported by the S&P CIQ Pro platform. It's an integrated data center containing figures from over 98,000 mining companies. It's a widely used tool in our industry. Cool. Let's dive into today's session. Here, the first slide shows global exploration budget from 1997 to 2024. Thanks to our exploration studies team, who surveyed more than 3,000 mining companies over the past years. And from this picture, we can clearly say that 2012 marked the historic peak of total budget. And in 2022, we saw another highest value since the past decade. So, although budget for the past 2 years are slightly lower than the 2022 level, they have still exceeded $11 billion. So overall, this spending remains quite strong, which is driven by rising commodity prices and growing market interest for energy transition metals. So when we look this chart again by breakdown by metals, it's clear that gold and copper are the top primary targets. For gold, we saw its price increase a lot during the last year. Its exploration budget fell by around $400 million year over year. But copper, we say its budget continued to rise as it is in the center of energy transition. And for lithium, driven by the demands from battery side, is growing even faster than copper, with budget exceeding $1 billion for the first time since we have this study. Then at the second page, let's look at this budget by project stage and company's type. We observed a sharp decline for grassroots exploration over time. In 1997, grassroots accounted for more than half of total budget, but in recent years, this share has dropped to less than a quarter. In the contrast, mindset level exploration is becoming more active. In China, we refer this as exploring near 2 months. Well, this is a current trend. We are also concerned about whether future supply will be sufficient given insufficient greenfield exploration. As we found in recent years, major discoveries in mining are becoming increasingly rare as we shift away from this early stage of mining. And the right chart of this slide, we show by companies figure. It's clear, like major company, they continue to expand their spending in exploration year over year, but we also say that junior companies' spending has dropped. It's important to note that junior companies are typically more active in grassroots exploration. Then, if we focus solely on grassroots exploration, we found that peak for junior spending occurred in 2008, and 2012 was a year for grassroots exploration peaking, which was almost double the amount for 2024. This change represents a huge drop, but we also say that grassroots exploration hasn't declined further since 2016. And this funding, we believe, is related to energy transition metals. As you can see from the right chart of this slide, in past 5 years, grassroots exploration for lithium increased by 500%, and we also see significant recovery in uranium and nickel. So the last page of this exploration parts, let's look at trends in Kazakhstan. We estimate that budget for Kazakhstan takes around 1% of global total. When compared to its contribution to world metal production, this share seems not at a high level. Copper and gold leads exploration in this place, with copper generally being the top contributor, and at the same time, we also notice uranium exploration is shrinking in here. It was once a $50 million market in 2013, but over past 5 years, the average budget for uranium exploration has fell to around $8 million. In the last year, we see Kazakhstan spent nearly $2 million for lithium exploration. However, to achieve the first production, we will expect this spending should sustain for several more years. As one of our most recent studies suggests, it takes roughly 18 years for a mining project in 2020s from discovery to production. And then the right chart of slides also shows by companies type figure. It's clear that major companies drive exploration in Kazakhstan. So for expanding budget purposes, it might be good for government to consider about providing more incentives for juniors to be active in this early stage of mining. Now, let's move on to the next part, which focuses more on cost and emissions. Our S&P cost curve covers 15 metals, but today we will concentrate on 4 metals only. They are gold, copper, zinc, and uranium. We estimate like Kazakhstan ranks 16th of global gold production and 10th in copper, 8th in zinc, and is a leading producer of uranium. So we shall start this part with gold. The all-in sustaining cost of world primary gold asset has almost unchanged in 2024, as some high-cost operations in the USA, Australia, and Canada have ceased. If we compare this change between gold cost and prices, we can see that the growth range for gold is quite normal. And if we look into this cost breakdown between 2020 and 2024, we see labor costs increased by 20% and energy rose by 37%. This indicator suggests that every company needs to pay attention to energy as it has changed more. And it could be a key for future cost management. One possible solution to maintain a stable unit energy price is to integrate cheaper clean energy into the power grid, like in China. The right chart of these slides, we listed out all Kazakhstan's primary gold assets that we covered. We found most of these mines are in the lower half of this curve, which means they are cost competitive. And we believe they could be even more competitive when expansion is available. Then let's turn to copper. In 2023, among these major copper producers, we found Kazakhstan has the lowest cost, and Chile is the largest producer. Its place is at a higher part of this chart. And Democratic Republic of Congo, the DRC, which has the highest average head grade, its cost is also higher than in Kazakhstan. And when we look back to 5 years ago, from the right chart, we see the cost of Kazakhstan is obviously lower than those of other major producers, but that advantage has narrowed down in recent years when compared to the DRC and Indonesia. Although cost inputs for those countries are also on the rise, but in the DRC and Indonesia, there are more projects that have been recently come online, like Kamoa Kakula, or expanded, like Grasberg. And the completion of these new projects have helped offset the impact from rising labor and energy. So this reinforces the importance of exploration, as developing new production will always need power of exploration. Okay, time to zinc. Over past 5 years, we have seen that zinc cost has increased due to mine-site level cost inputs. However, in 2024, we see a huge decrease in treatment and refining charges, the TC side. So the total cost of zinc in 2024 is actually slightly lower than in 2020. Like in China, the spot TC for imported zinc concentrate fell to a negative value from the second half of last year, which indicates a clear overcapacity of refineries benefiting zinc mines, which can allocate more shares from market revenue. And for this year, we also see that contract TC has set a price a lot lower than previous years. And we believe this low TC will persist in the near term, as the current market doesn't give attractive incentives for mines to increase their output. Finally, come to uranium. Kazakhstan has long been the world's largest tri-uranium oxide producers in the world, maintaining a share of over 35% during the past decade. And its closest rival, Canada, has seen its share decline as some production cutbacks in high-cost operations. And on this cost curve, we also see that Kazakhstan boasts a world-leading uranium asset, and their weighted average costs are well below the rest of the world. We have heard that Kazakhstan's government has some plans to build nuclear power plants, and these high-quality resources will provide a solid foundation for any future potential development. Then from the price side, although uranium prices have begun to decline, but as you can see, these mining operations, they still enjoy huge margins, as you can see from the right chart, and this reflects an increasing demands from nuclear power, and is also influenced by geopolitical factors, including tensions like involving Russia and Middle East. Okay, let's wrap up with the last 2 pages about emissions. We will talk about gold first and then copper. We estimate that Scope 1 and 2 emission intensity for gold has fell below 800 kg CO2 equivalent per ounce of gold produced in 2024. And the live chart shows mines like using underground as a primary mining method have seen greater reduction in intensities when compared to surface mining. Around 60% of our copper assay use grid power as their primary energy source, and we also found more decrements in intensities for these mines in recent years. The right chart will suggest that in the near term, these grid connecting mines, their intensity will soon be lower than those of mines relying on fossil fuel as their primary energy source. And this finding suggests that connecting mines to the grid power could be a key trend in the context of emission reduction. So last page, copper emission. We estimate the scope 1 and 2 emission intensity for copper is around 2.5 tons CO2 equivalent per ton of copper produced in 2024. The 3 top producing countries, Chile, Peru, and the DRC, their emission intensities are well below the rest of the world. We believe production scale is one reason for their low emissions, and widespread use of renewable energy is another. Based on our data, for these 3 countries, they have higher usage of hydroelectric sources, which help keep their coefficient of electricity emission low. And the right chart shows the major reduction in this intensity are also related to scope 2 factors. Therefore, emission reduction isn't just a concern for mining companies. It should be an issue that needs to be addressed at a broader and higher level, provincial and national levels alike. Okay, thank you for your time again. This is the end of my presentation. If you have any questions, please feel free to reach us in out of this conference. Thank you.
So we'll keep the format moving along. Our next talk is by Matthew Hope, who's the Regional Exploration Manager for First Quantum here in Central Asia. Matthew.
Good afternoon, everybody. I hope you all enjoyed your lunch and are ready for this session. Thank you for choosing to take the time to listen to us here. My name is Matthew Hope. I'm responsible for the new entry opportunities for First Quantum Minerals, looking for new jurisdictions, new projects, new mining assets that we can enter. That's taken us all over the world in that search, Papua New Guinea to Finland. And most recently, we've opened our office in Kazakhstan. I'm speaking to you here today because our geological lead here in Kazakhstan, James Banya's wife, has recently had a baby. So I'm stepping in to fill the breach. So I hope I can do a good job for him in representing that and representing our broader Kazakh team that we've established here and are doing a fantastic job. In 15 minutes, it's hard to tell a complete story of anything. So what I'm trying to do here is start a conversation. We have a booth just outside this door. You can barely get out of the room without going past us. So please come and visit, have a chat. Hopefully we can start some conversations. But specifically what I'm going to talk about is sediment-hosted copper deposits and how they were very important in our selection of Kazakhstan as the next entry opportunity for First Quantum Minerals. So we'll talk a bit about the past to eventually talk about the future. Let's see if I can get this thing to click forward. There we go. So First Quantum Minerals started less than 30 years ago, and you don't need to know the names of these mines. What I want you to understand, or hopefully illustrate, is that we kicked off and things happened pretty quick at First Quantum in the sediment-hosted copper space. So I'm going to focus on sediment-hosted copper deposits. We started in Zambia at a mine called Bwanamukubwa, small asset that we were reprocessing. Then we quickly started to make discoveries in the Congo. But there's a key moment here, that green dot that says Kansanshi acquired. We acquired Kansanshi for less than $30 million. And you'll see Kansanshi continue to come up on this time chart. And hopefully by certainly the end of next year, it will be producing 250,000 copper tonnes a year for us. So certainly an incredible asset that changed the trajectory of our business and is a very significant said copper deposit. So yeah, we continued on and we had more exploration successes. We started to expand Kansanshi. We purchased Sentinel also in Zambia. And at that time, we were politely asked by the Congolese government if we could leave the country. So we did that, and we instead diversified our risk. We bought inmet minerals and diversified into VMS and porphyries. Come on, baby, there we go. We then quickly brought Sentinel into production, only 5 years after acquisition. It's now a major copper producer, producing over 150,000 copper tonnes a year, and have, alongside that, developed a large porphyry copper portfolio of projects that we plan to develop. They're certainly part of our future and part of being in Kazakhstan. However, I want to keep us on the said copper story. So we established our office here in Kazakhstan in 2023. So that's where the journey starts here, and we'll talk a little bit about how we came to that decision. Okay, so a little bit more context. There's our Lonchi pit in DRC. And I've got an image here of an old map that was produced by the French in Congo. That map contains the Lonchi deposit that was later discovered by First Quantum Minerals. So I thought I'd share that because in Kazakhstan we have such a wealth of historic data, particularly that acquired by the Soviets, detailed mapping, a lot of data to move through. It can appear when there's that much data that all the work has been done. However, said hosted copper deposits are one of the more cryptic of copper deposits to understand from surface expression. May have very limited, if in fact the best deposits have extremely limited surface expressions. So we need to think about how we can understand the third dimension and how we can apply new technologies. The chart on the other side with the blue and orange bars shows in orange copper production from sediment-hosted copper deposits, and in blue our total copper production. There in 2024 it's a little over 400,000 tonnes. So you see said-hosted copper deposits continue to be very important to us. What this doesn't show is the developments at Cobre Panama and the current under review projects in Takataka and La Granja in Peru, which will be porphyry projects that will change our distribution. But being porphyry projects, they're going to impact our grade. So why do I mention grade? Well, here's a chart that we produced, and I won't go into all the details, it's a simplification. But this chart shows the average populations of ore grade taken to copper equivalent and size of different deposit classes. What you see in the purple is copper-nickel systems, in the green sediment-hosted copper, and in the red porphyries. So you see the porphyry systems are classically low grade and really challenged by cover. They don't make very good underground mines in general, except for the most exceptional type. Whereas said copper mines can be very big and quite good grades. And that's something we're quite attracted to. In the solid dots you'll see, above those major populations are First Quantum's project portfolio or assets under review. So you see we're always looking for projects that sit on the top side of that curve, that represent a bonus on the curve. So we know that there'll always be low-cost producers relative to the population. And again, you may just see, I don't know if there's the Kansanshi dot down in the PCD curve. That Kansanshi project is an absolutely world-class deposit that's changed everything. So, getting out of Africa, trying to diversify our risk, we went to quite a lot of trouble. We have a strong technical team in the said copper space, and we were trying to understand where we could go next to find the next major said copper projects and implement our expertise. Already we're in the Katangan in Zambia and the Congo. We felt that the Zechstein was going to be difficult for us. The depth to those targets was getting extreme for the thin nature of the ore. Udakan is a one deposit basin at this stage, and we felt the opportunity there was, for us at this time, more limited. But then we came to the Chusari-Sutenis in Kazakhstan, and we had this one on the radar for a long time. Timing is everything, and we were waiting for that intersection of the improved jurisdictional context with the opportunity that we felt presented in Kazakhstan. You'll see in general said copper basins don't host a lot of large deposits, with the Katangan accepted. They're often one or two big deposits. A lot of this in our view is around their difficulty to discover and the amount of exposure of the preferred stratigraphy in any given basin. So here in Kazakhstan we certainly have most of our most prospective sequences covered, potentially quite thickly covered, and we need to unlock those opportunities. So whilst I won't go into any detail on models and methods here, it's the wrong forum, but we've got a booth if you'd like to chat. When we were trying to take our learnings on the road, we spent a lot of time in working with the oil and gas industry and understanding how they target and how they work with basins and how they can get into a basin and test it quickly and evaluate its potential effectively with a minimum of drilling. It's very different to how we've done this sort of work in the past, where we've tended to do lots and lots of soils analysis and then drill for copper anomalies. If the deposit is not exposed at surface, you can't expect a copper anomaly, so you have to think different. So I would encourage you to think hard about oil and gas and what we can learn from that industry and the investment that they've already made. So our understanding is always evolving, and if you talk to us today, we would present a very different model of said copper than the one we would have discussed 10 years ago within First Quantum. And that change in that model and that approach has for us unlocked the ability to start considering the Chuseri Tennis as valuable and potentially high quality said copper targets. So where are we in Kazakhstan now as First Quantum? Some of you may already know us, some may be hearing about us for the first time. So we knew the copper was here in Kazakhstan, but we had to be sure that it was the right place for us to start investing money. We started our reviews in 2019 in quite a lot of detail around the jurisdiction and around the changing regimes and the encouragement for foreign direct investment. COVID happened and stymied our progress. However, we were able to convince some of our senior managers that this was worth a really good look and commenced our full country risk reviews in 2022. Quickly from there, we were able to start setting up an office. We now have a small team in Almaty and start building out our project portfolio. Our commitment to the business in Kazakhstan is that we will build our relationships. We will know what the opportunities are here in Kazakhstan, and we will know how to do business here. And to achieve that, we're trying to use as much Kazakh support as we can. And we hope that we will succeed in this. And so far, I would say Kazakhstan has been very receptive to us. We've been very welcomed. We've found ourselves very supported. And through the systems, we've been able to peg now 4 projects in the Chuseri Tennis, alongside 2 projects in the porphyry context. So I'm not sure if there's anyone here from Kazakh Mispa Lao. I haven't noticed anyone yet, but I'd really like to thank them. They were extremely welcoming to us, took us through all of their assets. We've been collaborating with them, and a really fantastic advertisement for Kazakhstan, the way that they've been so welcoming and working with us, and we hope we can repay them. So the search continues, and we're building our team. And if you have great ideas, we want to hear about them. We want you to come and bring them. We are really committed now to applying new technologies to the greatest degree we can. I noticed there's a presentation in one of the technology sessions about vector IP. We have recently done vector IP here in Kazakhstan. It's not a new technology in many respects. It's a rediscovered one, like so many of our deposits. And now we're looking deeply at application of magnetotellurics and hard rock seismic in the Chuseri Tennis to really start to push the boundaries. Alongside that, we have a couple of PhD geologists working hard on machine learning, using all of those very clever gizmos and gadgets that I frankly don't always fully comprehend. I think I'll stick with the rocks for now. But they certainly add value, and they open up our mind to new opportunities. And bringing all of the Soviet data and the data that's been made available to us through the Kazakh ministry into those structures is a really important focus for us going forward. It's something that we're still struggling with, but we hope to achieve. So you can see down there where there's a real commitment. We've built our team. That's James Banyard, the fellow who should be standing here last year. And down in the bottom, you can hardly see him, but under that big copper sign is our Director of Exploration. So the commitment to Kazakhstan is growing, and certainly we have really strong support from our board and our CEO to keep going here. Come on. I don't know why I'm having so much trouble with this. Where am I supposed to point it? That's what I need to know. There we go. So, thank you. So, basically starting to wrap up now. So where are we now? Where does this leave us? We have 5 projects in Kazakhstan at the moment, all of them fairly early stage. We'd love to get our hands on a slightly more advanced project and work with you if you think you have one that's suitable to us. But nevertheless, we're happy to work hard in this early stage projects. So 3 of them are in the Tenis, located between Geophysical and Jamanaibat. So we believe we're in the fairway, applying our oil and gas models to the existing data sets to try and unlock potential in that basin. We also have 2 porphyry projects in the Balkash, which we aren't talking about today, but are likewise earlier stage. We're finally going to do our first drilling, so within about 18 months of entering Kazakhstan, we'll be breaking ground with our first diamond drill holes. We're very excited about that. They'll be in the Tenis, they'll be deep holes. They'll be deep holes, and we'll be applying the complete tool set to them. All the petrophysical data we can collect, we'll be bringing all the expertise we can find to those holes to understand the basin and then to take our targeting forward from there. So we're very excited about those holes. If anyone has any, there are some concerns we have around the pressurized gas and the challenges that we're trying to face in the Tenis at the moment, Chuserisu around that. So open to ideas in that space too. And with that, I think I will finish my speech, and thank you very much for your time.
So we're going to move on with our next speaker, who's taken a slightly different tack, Sean Gregory, Managing Director of Sartogan Graphite.
Good afternoon. I'd like to start, if possible, by running a video that we have, a short video presentation of our pre-feasibility study. It's linked on the front page here for the AV guys there in the top right, if there's any chance to get that running. But look, perfect, thank you.
Графитовый проект Сары-Тоган
Project Saratogan is located in recognized mining industry of Kazakhstan and has strategic position between Europe and China, which will have beneficial impact on satisfaction of global demand for graphite. The area is in 100 kilometers from Karaganda, the fourth Kazakhstani biggest city. The graphite is a critical raw material used for lithium-ion batteries production. It is impossible to easily substitute it for using as not batteries. The market of batteries growing, it is forecasted that the demand will double in this. Geological Saratogan is carbonate shales and sandstones in synclinals running in northeast. Rocks were ruined with granite plutons that served as source of heat for strong contact metamorphosis, turning carbonaceous rocks to graphite mineralization. The exploration in the 2 important zones, central and northern assessment of the resources in Georgetown, made impressive $229 million with a grade of graphite 28.9%. That makes it one of the biggest and the highest quality graphite deposits globally. And the first stage of the project, annually 150,000 tons of high-grade graphite will be mined with very low stripping coefficient, which is 0.2 to 1. Assessment of raw material resources and standard job has been made and limited with nominal duration of mine of 60 years. That will make 4% from huge mineral resources. That points to the potential for expansion of production to satisfy the demand during many generations. Further, all will be transported to concentrated where it is crushed to natural microcrystal size less than 15 microns, and then it will be submitted to flotation. Then it will be dried and classified in 3 size fractions for production and processing. A model complex will be constructed to place local staffs that will be attracted from Karaganda region on shift-based. Tailing enrichment will be done in tailing dam constructed in the project. The water is easily available from natural resources based on the river water to the north from the mine. Also, electricity networks are also available. Graphite concentrate will be transported from the area. It will be delivered to the market for lithium production, plastics, resin, drilling, liquids, and dry smears. But the most part of concentrate will be further processed, and the plant for that will be placed close to renewable energy sources, power lines, and road infrastructure. And also local people will be working here. After considering several schemes, thermal treatment option has been selected due to its capacity to reach 99.99 grades. The granule will be delivered to platform and granulate prepared to thermal treatment. One thermal reactor will be that will treat concentrate to 99.99% of carbon in one process with a temperature of 2,800 degrees Celsius. The graphite will be graded, classified into fractions. These products can be sold on direct prices for many advanced applications, including improvement of cathode conductivity used in anodes of batteries and in nuclear reactors. At the first stage, a pilot installation will be added to continue the process of certification of anodes of lithium batteries. The third year, thermal reaction will be added so as to be compliant with the need of this product in the market. And in the feasibility study, we assess the opportunity to construct the full complex of 24 installation for ionization and the line for spheroxide and treat graphite production that can be used for active anode materials in batteries of electric cars. The products will be packed in containers and placed in railway cars for economic transportation to any point of continental Asia or Europe, and also for delivery to South America. Graphite project Sertagan is well positioned to satisfy the growing demand for graphite in batteries and other applications that assist to the revolution in the green energy.
So, Saratogan graphite. We're pleased to inform you that Kazakhstan hosts the world's second largest and the world's highest grade graphite deposit globally. We are ASX listed company SGA, Saratogan Graphite. Our resource, as I've just mentioned, world's second largest, world's highest grade. We completed a positive pre-feasibility study last year that identified a staged development strategy. A unique product strategy where we can produce carbon products at 80% carbon and also as high as 5 nines purity, which opens up some really interesting advanced battery uses for us. We're thrilled to be operating in Kazakhstan. We've had great support from the Kazakh government, and through that we've achieved our environmental permit and our granted mining licence, granted just in December. We've also attracted the investment from the European Bank for Reconstruction and Development, EBRD. They are our 17% shareholder, our major shareholder, and that is a real feather in our cap in terms of those guys don't just invest in any projects. We're now working on our definitive feasibility study and progressing early works, many of which are customer focused. Now, of course, it starts with the resource, and the video gave you a good introduction to that. But in summary, this is a little bit different to many other graphite projects globally. A lot of graphite projects, particularly in East Africa, are formed by regional metamorphism that grows graphite flakes into large graphite flakes. Now, that was certainly very attractive 10 years ago for traditional industrial uses, but if you want to get into high technology uses and battery uses, in fact, the finer your material is, the better. Our material is microcrystalline. It naturally wants to break down to a very fine size. We've just completed some milling tests at a lab in Karaganda where we took a 24-tonne mining sample and we did some trial milling on that, and we showed that our ore is very soft. It naturally wants to fall apart down to that microcrystalline size. The resource is enormous, but despite that, our strategy is to start small and expand from there. Now, this is the most technical slide in the presentation, so apologies for that, but it does outline our strategy and our stage development strategy. We start with our upstream process, which is flotation to produce an 80% carbon concentrate. We then go downstream with thermal purification and spheronisation to make graphite, spherical purified graphite for lithium-ion batteries. Now, we can do each of those stages step by step, and even that first stage is actually a very profitable little project where we can get up and running for as little as US $62 million, and that is a very profitable little enterprise. We then plan to go downstream and realise higher value products. Now, all of this is for 50,000 tonnes per annum for 1,000-year plus mine life, so all of this can be replicated over and over again. Now, this slide deals with benchmarking against our peers. I've already mentioned the size and grade of our deposit, which is enormous, but it also makes our value proposition very attractive. In terms of enterprise value per resource tonne, you can invest in Saratoga graphite for as little as 10 cents per resource tonne, and many of our peers are up around $1 per resource tonne. The slides on the right-hand side benchmark our costs. For our upstream process, we are in fact forecast to be the lowest cost out of all of those graphite projects listed on the ASX. We can produce graphite concentrate for around about US $270 per tonne, which puts us at the bottom end of that Western cost curve. There are a bunch of Chinese projects that are cheaper than that, but we'll talk about those in a minute. Downstream, we're also the lowest cost, a little bit more on the capex, but still a very profitable business. Now, we produce 3 product families. The first family is this microcrystalline 80% graphite product. It's used in foundries. It's used to make cast iron. Kazakhstan has a large steel industry, and our graphite would be just perfect to blend into that pig iron to make cast iron. You need to add about 3% carbon back in, and our material is perfect for that. We've made both grey cast iron and ductile cast iron that has met a whole bunch of international standards. We've also tested our graphite for lubrication properties, and it's excellent in that regard as well. The second family of products is our ultra-high purity fines. This is our purification, thermal purification. We take it to 5 nines purity, 99.999% carbon. And in this case, it's a very useful additive as a cathode conductivity enhancer. So it can go into alkaline batteries, your AA batteries. The world needs 12 billion of those every year. It can go into lead-acid batteries. Now, lead-acid batteries sound a little bit like old technology, but in fact, half of the world's energy storage is presently in lead-acid batteries. We've demonstrated that our graphite, when you coat the negative electrode with our material, it improves the performance. There's an incumbent product in that market that sells for about $18,000 per tonne, and we exceed the performance of that product. The purity is such that it's suitable for use in the nuclear moderator, which is a critical part of any nuclear reactor. We've even made diamonds. The third and final product in our offering is spherical purified graphite for lithium-ion batteries. We make uncoated spherical purified graphite and we coat it to make coated graphite, and we've demonstrated the use of that graphite. We've made those batteries and they perform very well. The market is continuing to grow strongly, and graphite demand is no different. but the price of graphite hasn't spiked through the roof as you might expect with that graphite demand. Now, the reason for that is synthetic graphite. Synthetic graphite has filled that demand for graphite. It can be turned on very, very quickly, and the Chinese have done that with these synthetic graphite plants. However, they're more expensive. Yes, they can be turned on quickly, but they're expensive, they're bad for the environment, and the products they produce are lower performing than our products. So we see that natural graphite mines will begin displacing synthetic graphite mines. And we see that in the geopolitical landscape. Obviously, the big news of the last couple of weeks is the tariffs in the US. And one little snippet there for you is that the tariffs on synthetic graphite have ratcheted up over the last 2 years from 24% to 50% to 79% to now 104% is the tariffs that USA are placing on synthetic graphite. Natural graphite is tariff-free, which I think just highlights the importance of the natural graphite offering, the strategic importance of this major asset of Kazakhstan. And the reason for that is that when we talk about critical raw materials, there is no raw material more critical than graphite. China dominates 70% of the world's graphite mining and almost all of the world's anodes. Kazakhstan has a unique opportunity to offer a very compelling alternative, chiefly to supply the European market. Now, I won't go through our Kazakhstan slides. Suffice to say, we're very pleased to be operating here, and I think I should be an honorary member of the Kazakh Tourist Board because I spend a lot of time promoting this in Australia. We're doing a little bit of exploration as well, copper exploration. We know Kazakhstan's low-cost copper. This is a photograph of our exploration team, myself and our technical director, Dr. Waldemar Muller, out on the steppe last November. We're out there exploring. We've got 2 copper projects, and we've identified some very interesting targets that we're looking to take forward this year. For the definitive feasibility study that's currently underway, that is our water rig on site just a couple of weeks ago. That drill rig is firming up the water allocation for the project, and really that is a key strategic asset to secure that water allocation. We've got very good water there. Great other infrastructure, roads, power, access to rail and so forth as well. We've got power and transportation studies underway. We're doing variability testing for our metallurgy. I mentioned the trial mine. Now, one of the main objectives of that trial mine is that'll be generating samples for customers. We've appointed a general sales and marketing director, a fellow very experienced in selling graphite, and him and I are on Zoom calls every other evening with potential customers looking to stitch up the offtake for the project. Now, all of this, we're listed on the Australian Stock Exchange, so of course I'd welcome any of you to open an online trading account and buy some shares in Saratogan. We think they are exceptionally well priced, and we are looking for new investors, of course, so please, if you've got any interest in investing in this remarkable story, please come and see us. And similarly on our copper projects as well, we're open for business on that front too. Thank you for your time.
Moving on, our next speaker is Barry Davis from Cyan Mining Group.
Good afternoon, ladies and gentlemen, and thank you for attending today. It looks like there's more and more people standing up, which is good. Which one are we on? This afternoon, I'm going to tell you a story, which is quite a long story now because it dates back to when I first came to Kazakhstan. I first came to Kazakhstan as the country manager for a large Australian company in 1997. So where did Scythian come from? It started in 1998, in actual fact. We came into Kazakhstan in 97 because we knew that there was a world's largest gold deposit here in Central Asia at Muruntau. And I'm going to discuss, that's where we came from, what our Scythian strategies and goals are, and how we're going to achieve it. So where we came from, 1998 to now. In 1998, I went to a trip to the Muruntau gold deposit in Uzbekistan. It was a very good trip. We were able to go to the pit and down the bottom of the pit, and it was very clear from our trip that there was no understanding of the controls, the structural controls, what's driving Muruntau, how it got there, and how to find another one. And so therefore I decided that in 2004, through some friends of mine and some funding from a small Australian company, we went back to Uzbekistan for a year and collected a database to try and understand the Muruntau deposit. And that database came from, obviously, Tashkent and Moscow, Bulgaria, all over the former Soviet Union. To pull that. The people involved were some very, very prominent structural geologists, Dr. Alan Gibbs, Dr. Mel Kopenberg, worked with Midland Valley Exploration in Glasgow, world-class structural geologists. They've gone on to work out the structural controls of Bingham Canyon for Rio Tinto in 2011. And from this, we worked out a structural model and an exploration model for Muruntau. It involved 7 key criteria, which we apply to picking up ground, and in everything we do. So when I come back to Kazakhstan in 2011, we started looking around, collecting data on potential projects that will fit those 7 criteria. And after a year, we just selected 2 projects. One was Caucasus, it was a gold project, and East Balkhash is a gold-copper porphyry system. We got funding from a large Russian company, and they are now control East Balkhash, and we control Caucasus 100%. Now we're moving on with Caucasus. Apart from the 7 criteria that are mentioned, we also apply 3 other criteria, which is important. First of all, logistics, keep it simple, the KISS principle. The needs to avoid the use of railways, pipelines, smelters, and there's only 2 commodities in the world that can do this, and that is gold and diamonds. So we stuck with the gold because we can produce a value-added product at the mine gate. It has to be large scale and low entry price. The entry price in Caucasus is low because it's owned by a local family, and they've become good friends of ours in the long term. And it can be scalable, it can be upgraded, it can grow from exploration. Exploration is the cheapest way to grow a project. And as it grows bigger, our target is 5 million ounces, and that's our exit strategy once it attracts a major company as investor or taken over. The CapEx also must be scalable, so you can start small, so you avoid dilution to your shareholders, and avoiding debt. So these are these other 3 criteria, and Caucasus meets those 3 criteria as well. So the idea is to establish Scythian as a world-class mining operation, a company, by getting over 5 million ounces. So from our study, from not only in Kazakhstan but in Uzbekistan, we've identified 1 other project in Kazakhstan that meets this criteria, plus 3 other in Uzbekistan, but Uzbekistan at this stage is still very difficult to work. How are we going to achieve these goals? First of all, we need to establish a world-class management team. And we've got a board now that has a lot of experience in Central Asia, Kazakhstan, from Peter Dasbury. He was involved in the float of Highland Gold and also Kaz Alton. Myself, as a technical team, local partner Yerlan Shakishov. Then we've got a lot of experience with, in banking and finance in the UK and the Middle East there, and throughout. So we've got a very broad experience in our board. So where are we with Caucasus? Caucasus is in central Kazakhstan. It's on the Yanteli Fault, which goes all the way from basically Bolshoi down into where First Quantum are working, and also Palace and Ivanhoe, and up where RES is working up and around Bolshoi. So it's a major structure right through central Kazakhstan. It's over 1,100 kilometres long, and where we are is about 5 or 6 kilometres wide. So what sort of structure have we got here? We've got what we call a fold thrust structure. It's a series of 3 folds that's been folded on top of each other, and then it's thrusted. And what's causing this here, if you see up in the, has it got a pointer on it? Okay. It gets difficult. So it's a difficult point this out, but the purple image is a contour map. These are ridges, the 3 ridges, which are the top of the fold nose of the structures, and underneath that is the feeder structure below that, and the dotted line is basically where the current erosion surface is at the moment. So some of the intersections we've got in the last couple of years. We started drilling here in 2018 and also 2019 and in 2022. 163 metres at 1.4, 86 metres at 5.65, and I'll talk a bit more about that intersection later. 84 metres at 2.6, so it's very substantial intersections. And this. So here we got a little bit more on Caucasus. That structure, that picture there is a myelinite structure, and I'll explain a little bit what a myelinite is. Myelinites they're a structure that form very deep in the Earth's crust. They are very fluid, very flexible. They're under a lot of pressure. They don't crack and break like a fault. They tend to flow, and they do take different shapes and folded under pressure, and therefore they act completely different. And in this case, that myelinite structure is about where we've drilled, probably a true width about 50 metres wide, and either side of that there's another 4 structures either side of that. So it's got a mineralised envelope about 200 metres wide. It's near Adasu, it's 4-hour drive from Karaganda, and we're moving to 100% equity as we go to pre-IPO funding. There's still a road to within 15 k's of the site, and there's a power line basically going through the ore body, which we'll have to move eventually. A low population area. There's a picture of it. You can see the trenches that were done in 22 for the structural study, all those white lines. There's a detailed structural study to work out the fold thrust system. And where we drilled, we've only drilled 500 metres of this structure. It's over 3.5 kilometres long. And we plan to drill a lot more in this year, a long strike and a long width. But what we found in the end of last year is a IP study was completed by Aurora Minerals, and we can see in the red triangle is the area where we drilled, and it's not very big. It's only 500 metres by 400 metres. That's where the mineralisation to date is. We see a very large geochem signal around that, and that's about 2 kilometres long. There's another one to the northwest, northeast, and that's about another 500 metres. And so, therefore, what we got is a flat-lying structure, and it's about 3 kilometres long by 3 kilometres wide. It's a bit of a triangle shape. It's folded to the north. And if you look at where we've drilled actually in the chargeability anomaly. That's where our drilling has been. So we know that that IP structure is real and it is mineralised. And where we find the geochem signature is usually above that. And once we go, we've got a small resource here of about, as an oxide resource, 150,000 ounces, and as probably a sulfide resource, about 200,000 ounces. So we need to drill a lot further along strike, down dip, in every direction, basically. So if you look at this IP line 5, it's very long, it's 3 kilometres long, and that's basically your myelinite. There's a structure here at K1, we've got a geochem signature there, that's where we drilled, we know it's mineralised. We also got a geochem signature there at K10, also where the outcrops are Gossan there, 500 metres exposed. Wherever it's exposed, we are getting mineralisation, gold mineralisation. And the whole mineralised envelope is 200 metres, but the main core of it, the K1 myelinite's about 50 metres wide. So that's our main target. Now, if you want to try and understand this, I'll try and translate it to numbers, so non-technical people understand it. Okay, if we just take the geochem signature, which is basically about 2.5 kilometres long, down to a depth of 350 metres, thickness of 50 metres, SG of 2.65 and a grade of 1.3, which is about the average we're getting at the moment, then we get a resource of about 5 million ounces, 150 tonne. That's only on the geochem signature alone. Because if you take the IP signature and the geochem together, we've got 3 kilometres of length, strike length. We've got a width, because it's a triangle, the width is half the base, is 1,500 metres, a thickness of 50 metres. SG at 2.6 again, grades is much the same. Then you potentially here could have nearly 24 million ounces. So we're very confident that this is mineralised and we will have that success once the drilling starts this year. So that's where we are now. We're going to raise, in the process of raising money to do an IPO in the London stock market this year, and we're currently talking with various investors here in Kazakhstan to fund us for the next year or so as we build up this resource before we go and take it in production. Okay. Thank you.
And please feel free in the coffee break to accost all of the speakers today with your burning questions. Our next speaker is Alex Walker, he's CEO of East Star Resources, and he's going to be talking about Kazakhstan copper and gold potential.
Thank you very much. A lot of familiar faces in the audience today. It was a hot summer's day in Fremantle, Western Australia in 2019, and I was watching my 2-year-old daughter play on the floor with her 6-month-old baby brother, and I looked up at my nurturing wife and I said, "Hun, I think we should move to Kazakhstan." And we've been here for 4 years now, and this is the story of what we've achieved in those 4 years that I'm very excited to tell you about. In quick summary, Kazakhstan's, you're a bit like a kid in a candy shop, so getting your focus can be quite difficult. We've started to refine that focus in the last few years to Tier 1 copper porphyry targets in a proven belt, multi-million ounce gold targets with a similar targeting methodology to the porphyries. We already have demonstrated success with over 230,000 tonnes of contained copper in a JORC resource at over 1.2% copper equivalent, and we've got a pretty punchy exploration program for this year. A little bit about Kazakhstan. I don't need to talk to this room too much about the country, but what I will say is, in the current geopolitical environment, there's no place in the world I'd rather be. This is a region of the world where everyone will continue to invest their exploration dollars and their infrastructure dollars because it takes 1/3 of the amount of time to transport goods between China and Europe through Kazakhstan as it does by sea. And I think we can all feel very comfortable with the fact that China and Europe are going to want to trade more and more over the coming years. It's a top-tier jurisdiction for copper gold, it's a top-tier jurisdiction for chrome and uranium, and it's one of the lowest cost production countries in the world, the lowest cost production countries in the world. I like to tell people in Australia it's the cheapest place in the world to dig a hole. A little bit about the country and our strategies. Volcanogenic massive sulfide in the east region, a proven belt more than 800 kilometres long, and they've been mining there since 1749, which was a few hundred years before gold was discovered in Western Australia in Kalgoorlie. Strategy number 2 is a proven copper porphyry belt, the Balkash-Eli magmatic arc, where our thesis is very much an underexplored belt that I'll demonstrate that to you today. And strategy 3 is a lot more early days in sediment-hosted copper exploration, where we've done our initial targeting work, and we hope to partner on that strategy in the not too distant future. Probably everyone's familiar with commodity markets, again in this room, so I don't need to talk to you about the future supply-demand dynamic for copper. What I will say is that the most specific and most relevant part of this is quite recent when it comes to the treatment charges and refining charges that have absolutely collapsed to all-time lows over the last sort of 6 to 12 months. So that's happening globally, which is fantastic for concentrate producers because it means more of the margin is put back onto the concentrate producer. And now we're talking about we're working in a country where we already have quite a lot of concentrate export, but some major companies like Kaz Minerals are building additional copper smelters and capacity in country. So what I'll say is we don't see that dynamic changing anytime soon, and the supply-demand dynamic I'll leave up to you, but we're certainly feeling very bullish about it. I don't have a slide on gold. Gold's at $3,000, enough said. The first part of the strategy, the Rudny Altai volcanogenic massive sulfide belt, we've spent 3 years working in this belt, working up targets. This is infrastructure-led exploration. This is a region where every smelter has excess capacity, and there are 2. Every concentrator has excess capacity, and there are many. Mine lives are depleting across the board. The roads and the infrastructure is in place. The power and water and rail is in place, and they have a very, very talented and significant workforce that is soon going to be depleting heavily as some of these mines shut. So we're very happy to be in this part of the world. Certainly in terms of social licence to operate, you could not ask for a better ACUMAT and a better jurisdiction. Every time we see them, they come in and say, when are you going to start mining? And we feel very, very confident that the typical sort of approvals processes and difficulties that you have in a lot of other jurisdictions are not the case across the board in Kazakhstan, specifically not the case in Shemwonayaka and East region. This is our deposit so far. It's 45,000 metres of historic drilling, 2,000 metres of E-star drilling. As it stands, it's about 230,000 tonnes of contained copper, and every time we drill a hole, we feel we're going to increase that copper resource. Every time we collect an additional piece of data, we feel we're going to increase that copper resource. The resource is not constrained by the amount of copper in the ground, it's constrained by the data and the availability of information that we have. So there are a number of gaps in this resource that every time we drill a hole in it and we intersect more copper, we are converting waste to ore. So it's our feeling that we will comfortably have an open pit scenario here, and the more money and time we spend on this, the more we'll be able to demonstrate that. We did some infill drilling at the end of last year. We expect to be starting again come May, June. And again, we feel we've got multiple development options, as I've mentioned, with regards to local concentrators and potentially low cost our own development. We've been exploring this region for 3 years. We've had over 800 square kilometres across the board. We're now down to 500, and we'll be looking to drop more ground, largely because we've refined our exploration. We've done heliborne EM surveys, IP surveys, soil sampling, and we've sampled 17 past and current producing mines in the region. So we know what an ore body looks like. We know what the fingerprint, as we like to say, the lithogeochemical fingerprint of an ore body looks like. So when I start to point to targets, which I'll do in a moment, like Talovskoye and Rulika, and I say this is in the same rock package as Nikolovskoye, which is 10 kilometres down the road and is 40 million tonnes at about 4% copper equivalent, you can feel confident that we're very confident with that work. 4 years before we've even decided where to drill that hole. So a little bit on that. Talovskoye, we've spent a long time trying to figure out what it is. We are relatively confident it's a VMS deposit. We did some sampling at surface and got absolutely stonking grades. To be honest, it wasn't that difficult. Massive sulphide at the edge of the ore bodies that used to be mined by artisanal miners. You can see blatantly obvious that it's got the chalcopyrite, that it's got the sphalerite, and that's why you're getting 8% copper. That's why you're getting more than 20% lead. It's why you're getting more than 100 grams silver. Now those pipes are quite thin, 1 to 2 metres wide, generally speaking, and generally down to about 50 metres. So how big is it? You know, what is it? Well, we weren't quite sure, so we've done some IP, and we've got a couple of anomalies. Small ones to the north, which could be a couple of pipes similar to the ones that were discovered previously, but most importantly, a much larger chargeable zone to the southwest. So if I'm going to drill an IP anomaly, I'd like to drill one below a very high-grade mine. So our intention is to do that this year. Rulika is a deposit which they built a town on top of. We have a lot of the data for the Rulika deposit. We are doing our own work in terms of resource modelling for that. So the resource that you see here is one that's been published publicly in papers, and in essence was an old GKZ resource. We have an EM anomaly adjacent to that resource and a long strike. We have an IP anomaly within a few hundred metres of that known deposit, which our independent geophysicists out of Australia described as more than 10% sulphides. And so we'd like to see if that continues. The EM anomaly to the IP anomaly is about 1 kilometre, and if the anomaly continues over to the east, which we believe it does, and we've got copper outcrops at surface, small amounts of copper outcrop at surface to the east, then that will extend over to about 1.5 to 2 kilometres. If you're going to drill an EM anomaly and an IP anomaly, you're going to want to do it below a mine or next to a deposit. So that's our second target that's taken 3 years to generate. Last year, Eastar was fortunate enough to be a part of the BHP Explore program. We call it the 1% Club because there were around 600 applicants and 6 people got in. We did a lot of work in that program. A lot of it was legally related, but we did a hell of a lot of geological work as well. We did plate tectonic and kinematic reconstruction of more than 200,000 square kilometres on the Balkashili magmatic arc, and we did a lot of asterospectral imaging, and we prioritised over 150 lithocap porphyry targets. We pegged a couple of targets. One we dropped after we did soil sampling, and we're going to intend to refine this target, but this snowy target was one that came out of it. And I want to really highlight where we feel Kazakhstan is today in terms of its exploration, because my general feeling is it's this belt in particular is the Andes, but 50 years ago. We now have porphyry exploration models which weren't available when the Soviets were doing most of their work here in the 50s and 60s. We now have geochemical zonation models for porphyry exploration which didn't exist back then, and in fact is an early 90s application of porphyry exploration geoscience. We have alteration models, which are very, very relevant and very, very recent to these. And now we now have spectral imaging that we can do that work very, very quickly and very, very efficiently. So what we've got, which we didn't know we had until the guy that made a lot of the discoveries said, geez, that looks like a high sulfidation epithermal system, is a high sulfidation epithermal system. The alteration footprint looks the same, and it is similar in scale, if not larger in scale, to the multi-million ounce deposits in the Andes. Again, a deposit model, which wasn't really established properly until the early 90s. Interestingly, the quote there, where porphyry occurs with white mica, the top of a porphyry environment is indicated, was first observed at Kunrad, which we were very pleased to find out, and I think Anna Fonseca touched in her presentation this morning. So we have quite a big porphyry signature. We have a very big high aluminium mica signature to the north and a low aluminium one to the south. And so it looks and smells like a porphyry, but is it mineralised? Well, I can't tell you that yet. but I can tell you we've got 4 kilometres of gold in soil anomaly at surface. We've got 4 kilometres of gold in silver anomaly at surface. We've got an artisanal gold mine a few hundred metres to the west of our licence area. And only 2 weeks ago we got the report on the artisanal mine, or the old mine, a few hundred metres to the east of our area, both sitting on topographic lows across 4 kilometres, and that is that's the predicted resource of that target. When they mined 21,000 tonnes at 42 grams gold and 2,000 grams silver. So I can't tell you if we've got a gold deposit here, but I can tell you if we do, it's very big, it's potentially extremely high grade, and I want to be a shareholder when we find out. So in summary, East Star has spent 4 years getting to this point today. We have a JORC resource, so proven capacity to explore and define resources. We've got another deposit which we expect to convert to a JORC resource in the next 6 to 12 months. We have 2 targets below and next to known deposits and mines with very, very strong geophysical anomalies, which we'll be drilling this year. And we've got a really, really big gold anomaly with 60-gram gold mines sitting right next door to it. We'll be acquiring a few new licences this year, and so we hope to be adding to this presentation in the not too distant future. But 2025 is set to be a fantastic year for East Star, and now is the time to make discoveries. So thank you very much for your time.
Well, thank you for staying with us. Now our final speaker, Tim Barry, CEO of Aris Minerals.
I think the tenor of the talk has represented the mining industry for the last, I guess, decade. We started off with Sun Yu in perfect English, and then we had a period of Australian English, and now we're picking it up to New Zealand English. So I want to talk about the Boshakol-Chingis magmatic arc, which I think is an emerging world-class porphyry belt. So this is the statement: don't believe a word I say, and don't believe a word I say. All right, so here's where we are in Kazakhstan. Main cities, obviously we're up in Astana with Almaty and Karaganda in the centre. Now, Kazakhstan's been a well-known porphyry province ever since the Soviets undertook major exploration. Here's the known porphyry deposits in Kazakhstan, spread across 3 quite distinct porphyry belts. So the north-south belt, the green, that's the Ural belt. We've got the Ili-Balkhash belt, which is the blue, and the belt that I'm talking about, the Boshakol-Chingis magmatic arc, is shown in pink. And our projects sit in the very northern part of that, in what's a fold nose of this Boshakol-Chingis magmatic arc. And there's 3 known porphyries in this belt. 2 of them are in production, and we've got the 3rd, our Muskoga project. The Boshakol and Nurkargan projects speak to the fertility of the belt and the fact that economic mineralisation is abundant. So when I entered the country back in 2021, this was the licence area that we had an option to purchase on called the Muskoga project. Since then, we've staked an additional 3,300 square kilometres of ground, which is shown in green. And then out of that ground, we've undertaken a strategic alliance with Teck Resources, one of the largest mining companies in Canada. And you can see those areas shown in purple, and we maintain control over the areas in green 100%. So to zoom you in on what we call our Alamus licence. One of the things we've found very effective when exploring in Kazakhstan is soil sampling. So we smashed the LMS license with about 32,000 soil samples at 50-metre centres. Probably overdoing it, but it was a very good base to see what kind of anomalies we started to pick up. And if I zoom you into this area here, we picked up an 8.8 kilometre long coherent copper anomaly, which had some historical Soviet drilling in an area we call Berezky North, 132.6 metres at 0.8 copper equivalent, starting at surface. Berezky East, 108 metres at 0.94 copper equivalent, again starting at surface. And then we did some sampling of some historical trenches, and again, very high grade, up to 29 grams gold and with historical veins. And then there was another area of intense alteration, which is indicative of a porphyry system that hadn't really been sampled. So to give you an idea of scale, just because it's hard to get a sense of this when you're looking at it on screen, the distance between Berezky North and Berezky Central is 5 kilometres, and everything in between that remains open and undrilled. So at the end of last year, we targeted this area with our first drill program, and the first 3 holes went in to the south in what we call Berezky Central, and the best hole that came back was 261 metres at 0.64 copper equivalent, starting at surface. We then dragged the rig over to the east and again hit a very gold-rich portion of the deposit of 96.8 metres at over a gram, starting at surface. And then our headline hole was when we dragged the rig up to the north, 5 kilometres to Berezky North, and this is where we hit 547 metres at 0.7 copper equivalent. And roughly it's about a 50-50 split between copper and gold in terms of its metal value. So we've got a rough demarcation what we saw in the core. On the western side of the anomaly, we tended to get more porphyry-style mineralisation, and on the eastern side we tended to get more epithermal, so higher in the system, but the two systems are very much related. And again, that's the scale that you're talking about, with everything in between being wide open. So if we take a look at the results, that's the headline hole, 547 metres at 0.7 copper equivalent. And the thing I'll just highlight is that the hole ended in very good mineralisation, so 64 metres at 0.68 copper equivalent, and it's mineralised from top to bottom. And then we had another hole very close to this, which was 56 metres starting at surface at 0.68, but there was a very nice zone at over 1% copper. And unfortunately, when we drilled through this hole, it got truncated by a fault and we lost the mineralisation on the other side. So to show you what it looks like in actual photos, so the top part of this hole, of hole 5, the 547 metres, is kind of a breccia, altered zone of very good sulphide mineralisation. That goes down to 390 metres, and then we drill out of that and punch into classic porphyry style at the bottom. And that sort of speaks to the different levels of a porphyry system that we were seeing. So it's very much an intact system. And then hole 6, which had the 1% intercept from surface, is very much porphyry style starting at surface. So how that looks in section is like this. We've got our breccia pipe, our altered zone, and the epithermal alteration, which is the 390 metres, was the first part of the hole, and then we punched into porphyry at depth, and that remains open. And then we had our hole over about 1 kilometre to the west on hole 6, and that's the hole where we hit over 20 metres at 1% copper. And that got truncated by a structure, which sort of speaks to the fact that structure is going to be a big deal in this deposit. We really have to spend a lot of time understanding what the faulting is doing. Now, if we zoom out again and look at the soil sampling that we did on the Alamus project, everything we've been talking about sits there. And if we zoom in and look at this copper anomaly again, our 8.8 kilometre copper anomaly, we also, in our soil sampling, highlighted a classic bullseye molybdenum anomaly. And that is 2 kilometres by 3 kilometres and very coherent. And that's what we targeted when we drilled in the southern portion of this anomaly. And so if you look at hole 1, that was an intercept of 476 metres at 0.44 copper equivalent starting at surface, and that's where we had the zone of 261 metres at 0.64 copper equivalent. Hole 2 was off to the side. It was a lower grade intercept but still good mineralisation, and hole 3 same thing again. So our drilling really only tested the edges of this Molly anomaly. And the big question, and what we'll be going and targeting this year, is what happens in the guts of it. So there's a lot more to find here on this Alamus licence. If you look at the copper, we've got 2 quite distinct trends. We've got our Berezki target, and that's where all the drilling I've been talking about has focused. And then, And then we've got this Imandai target. That's a 14 kilometre long copper anomaly that's never been drilled before. And so for us, this is going to be a major part of what we're looking to do this year. We've got some ground geophysics targeting these areas. We'll follow this up with plus 10,000 metres of drilling in the Berezki target, and then 5,000 metres on Imandai. Now, the other great thing about the Alamus project is its infrastructure. This is really what makes a project tick. You need the mineralisation and you need the infrastructure. So this is everything that I've been talking about, focused in that red area. This is the town of Ekibastuz. We're 13 kilometres away from the project. It's quite annoying, isn't it? We're 15 kilometres away from rail. We've got road going right through the project, and we've got power going right through the project. This is the ingredients you need to turn a deposit into a mine. So the last thing I'll talk about is our strategic alliance with Teck. So everything that we're focused on is in the purple. And if I zoom into this area here, the work that we completed last year identified a numerous number of targets. So we had very much a northeast-southwest trend, and then we picked up a second northeast-southwest trend to the south. And what makes these targets as exciting as they are is right in the middle is the Geological mine. So that again just speaks to the fertility. So to finish the talk, because I'm running out of time, is the thing I'll point out is there's 3 known porphyries in the Geological Chingis magmatic arc. I think there's a lot more, and you'll be hearing about them this year. Thank you very much.
That concludes the session. There is tea and coffee served outside, but I'd just like to thank all our speakers for some excellent talks this afternoon. Thank you.
Kazakhstan, the world's 9th largest country by land area, is rich in mineral resources that have long supported its economy. However, resource depletion and the need for new investments challenge the sustainability of its mining sector. With over 30 years of limited greenfield exploration, Kazakhstan is revitalizing its mining approach through policy reforms, technological advancements, and strategic investments. Recent government initiatives focus on updating subsurface regulations, offering tax incentives, and encouraging private sector participation, leading to increased private investment in exploration. The country aims to attract both domestic and international capital by tapping into its underdeveloped mineral wealth, including rare earth metals. Artificial intelligence is enhancing data processing, while remote sensing technologies like hyperspectral imaging and LiDAR improve geological mapping. The government and companies are also employing advanced exploration techniques to access previously unreachable geological formations. Despite progress, challenges remain, such as the need for sustainable resource management. Kazakhstan's strategy integrates environmental considerations with economic growth, exemplified by projects like the Aras Minerals, Saritogan Graphite Mine, and First Quantum Minerals sediment-hosted copper exploration. Meanwhile, companies such as Scythian Mining Group and East Star Resources highlight the role of IPOs and international partnerships in scaling exploration efforts. This session with the keynote from S&P Global will explore current trends in mineral exploration, costs and emissions, offering perspectives from industry leaders on navigating technology, policy and investment in Kazakhstan's mining future.